Hey everybody, welcome to my stock trading tips. My name is Andrew, and in the last video, if you remember, I took you through the thinking behind the reason why I lost money on a stock trade not too long ago. Fortunately, 2 days after that video, I actually made all that money back plus a little bit more. Today, what I want to do is go through 4 key terms that I think it's really important for everyone to understand, and it doesn't matter whether you want to trade or invest. These 4 terms, if you can identify them, if you can understand them and then identify them on a stock chart, it'll really help you make some better decisions. Okay, so the first term we're going to talk about is a moving average, and really, you can't really talk about a moving average in isolation. We're going to talk about moving average and we'll talk about moving average crossover. All right, and we'll put those together. Let's start with moving average. Simply put, a stock's price opens and closes every single day. Now, a moving average takes the closing price of a stock over a certain period of time and just gives you the average. So if we talk about a 15-day moving average, which is one that I use frequently for my strategy. Basically, it's the closing price of the stock over a period of 15 days. So each day you take those, you add those together, and then you divide by 15. The reason why it's called a moving average is because every single day this calculation is done. And so you're going to have a new day added on to the front, and the oldest day, the oldest closing price is going to be dropped off. So that's why it's a moving average. But whatever you select, the time period you select, will remain intact. All right, so that's an example of, that's an explanation of your moving average. Now, the crossover part is significant. So that's where you take 2 moving averages, meaning 2 different time periods, and you put them on your chart. Now, when you put them on the chart, it's plotted as a line. So I'm going to show you 2 crossovers. So this red line here represents my 30-day moving average, and the blue line represents my 15-day. Notice here there's a crossover. The blue line has crossed down below the red line. That lets me know that the average closing price of this stock over the last 15 days is becoming less than the average closing price of the stock over the last 30 days. So that lets me know that the buying is starting to slow down. As the buying slows down, then the selling picks up, and that's why the price drops, because it's basic supply and demand. So the selling has started to really pick up pace here, and it just dropped all the way down to the low of the year, which was $9.04. Now, so this is what we would call a bearish signal. It means the price, you may experience a significant price drop. Now, on the flip side of that, we've got what we would call a bullish signal, because the 15-day moving average has crossed above the 30-day moving average. That means buying has picked up. The average closing price of the stock in the last 15 days has increased. So that lets me know that there is some momentum building. I don't know what's going to happen. I don't know what to make of this, but it does let me know there's a whole lot more interest in this stock. So there's a chance that it would make sense for me to get involved. All right, so this is what we would call a bullish crossover. Now, after taking note of the whether it's a bullish cross or a bearish cross, we also need to pay attention to the next 2 terms, support and resistance. This one shows a very good example of each. So right here, I'm going to draw this line because I noticed that the price keeps bumping along this level. Okay, and this level right here is around $10.85. So these candles here, this is what this visual of the price for each day is called. This candle keeps on returning to this level. It went up a little bit on the next day, but then the day after it fell, but it did not drop below this line. Next day, the same thing. It went a little bit higher that day, but it still stayed around this key level. So this is what we would call a support line. Now, I also noticed that the price would not go above a certain point. So I'm going to draw another line because that lets me know there's some resistance. So let me draw that right here. It's letting me know that this support line is where everyone involved in the stock for this time period feels like the stock is at least worth $10.85. That's a fair price for the stock. But then above that, nobody during this time period feels like the stock is fair above about $11.30. Now, as a trader, that's really important for me to pay attention to because I don't want to be stuck in a stock that's just going sideways. So I may wait to see if the stock price is going to close above resistance, because this is what's known as resistance. The price has not broken through this key level. Once it starts to close above the resistance line, that lets me know a new price level may be set. So that's also a bullish signal. So we have two bullish signals here. We've got this moving average crossover that's going above the 30-day. Then we have this support line here. It won't go below this point. And then we notice here is some resistance. So we're just kind of waiting to see, hey, what's going to happen? Because if it breaks above this point, there's a chance that the stock is going to continue higher and find a new level of a new fair value, basically. And so that's what happened. It closed above this resistance line, and when the stock closes above resistance, then the resistance line switches and becomes support, because it's supported here on this day, it's supported on the next day, and then for whatever reason, everyone felt, okay, this stock is actually undervalued. It should be, it should cost a whole lot more per share, and it just took off from there. And if we zoom out, you can see exactly what it did for the rest of the year. All right, hopefully that made sense. If not, if you want to continue your education on these four terms, I would definitely suggest that you do that and check out investopedia.com. I'll be doing some more videos on this, because as I get into the strategy that I use and I start going through some of the picks, the stock picks that I'll go through, I'm really going to be looking for the crossovers. I'm going to be looking for support and resistance to help me determine whether or not I want to be involved in a trade. And I'll do that in future videos. If you like this video, of course, I'll ask for you to actually click that like button. If this is your first time finding one of the videos, definitely I would suggest subscribing to the video and click that little bell so that you get a notification when a new video is added on. All right, hopefully I'll see you in the next, I always say that. I'm not going to see anybody in the next video. I hope you guys see me in the next video. Take it easy.